Crude oil last week has seen a sharp drop coming in from the highs at close to 86. We have seen it dropping towards 81. Yet, if you notice, the movement is still delivering higher lows and it has not yet reached $80 levels. Now, can we expect this fall to continue? Can we consider this as reversal? And further drop in oil can be expected, as the last candle was a breakout candle. What is going to be our strategy in order to profit trading crude oil in the coming week? We will see with the help of charts followed with indicators. And towards the end of this update, I will be sharing the trading strategy and levels to watch out for. So do watch till the end. Do like, share and comment. Subscribe and press the bell icon to get the twice a day updates which I share for crude oil. First with the Asia session, next with the US session, where in these two updates you get the trading levels every day to trade for. And do join the free Telegram channel for live market updates or be a part of the channel memberships here on YouTube to support the effort. Let's start first to look into 4-hour charts. Now on the 4-hour charts, we can clearly see it is forming a double bottom here at 81.1. We have seen oil attempting twice to break past below this. Now in the coming week, if you see it is staying below 81, you can say that it is willing to drop further. And then I will be looking forward to 84.5 levels as the first resistance zone, and below that only further drop can be seen. If you look at the larger movement, see this was the first support here forming the double bottom. It has seen a rise. Now this is a retracement coming in from the highs at $87 levels. Now this has retraced strongly, and a complete reversal from here cannot be denied. We can expect this to happen, but that is only possible if it breaks beyond 86. Then you can consider that oil is breaking out. Else right now the momentum is not very much in favor of this bullish movement. Also, if you look at the last few 4-hour candles, see there was a drop. It has erased the gains from this candle, tried to bounce back, and almost it is getting stabilized at around 82. So this zone is definitely to be watched out for between 82 and 81. It is going to remain critical for the coming week. Coming to daily, on the daily charts, double bottom almost closing above $82 levels, forming it a very good support. But if you look at what has happened, just these two candles are identically symmetrical. Bearishness, a swing, and then a bearish candle, which is also a major bearish candle because it has started on a flat note, which suggests that there could be continuation on the downside. We have to watch out. Now on the downside, if it tries to drop, where are the supports? See, $80 levels indeed is a very good support, and then you can find out. See, this is how it has been trading. It can try to get the support in and around $79, $80 levels, and breaking below which, as long as 76 is not taken, we should not be treating oil as bearish. What it is trying to do, see, it has formed a base here. It has seen the rise. It can try to hit this before bouncing back. So I will say that oil is trying to retrace, but I will still not say that it is bearish. It has to break these critical support levels below 80. Below 80, it is going to be tough for oil to go further down. Coming to weekly, on the weekly charts, if you look at, see, this was the drop here. It is consolidated, then the first rise, then again here it is formed a double bottom. You can say, look at this, none of the candles failed to close below 70 here, and then this rise. At this point I had mentioned that oil is looking forward to a rise. Now after a stronger bullish movement, it has retraced and erased most of the gains in just 2. Thus it has to come out of this channel and trade below 80 in order to confirm the bearishness. Else it is still not bearish. Below 80 is where we can look forward to 77, 76 zone, and in fact then on the weekly charts the drop could be further sharp. However, I have my apprehensions for oil to carry such bearishness. I will show with the help of indicators why it could still continue on the upside. Now let's have a look at the monthly. On the monthly candle also, rise, retracement, first drop, again the retracement, second drop, same observation, and in general after that observation it tries to move towards the top of this, which is this zone that is at around 100-120 levels. Now what has happened, it has formed 3 symmetrical candles, 3 red, 3 green is done, and this is a consolidation candle. It is not a reversal candle as of, and also the month is not closed. So what it can try to do, because 3 green is done, it can try to show you swings, which means it can try to come down at best towards this zone, which is situated at around 78, 77, and from these levels it can try to bounce back. Or also you can note the movement from where the candle is started at around 83.2. It has achieved $4 levels here, 87. And it can try to achieve the similar levels on the downside, which makes it 79.1. So achieving 79.1, we can see a bounce back, and it can close the month at around same 80 to 83 zone. Possibility exists that it can try to deliver a swing candle and then continue on the upside in the coming month. So this is one very strong probability which exists for oil for this month. Right now appears that oil is trying to trade with slight bearishness for the next few sessions, taking it till towards possibly 79 and then recover from those levels. Now let's have a look with the help of indicators. Indicators on the 4-hour charts, moving averages are trading with divergence, staying bearish. 84 is the one critical level it needs to break now. 83 is first, 84 is second. These are the 20 and 50 period moving average, beyond which you can treat this as slightly. If you look at the Bollinger Bands, these are trying to come down, and this is a slight bearish sign because the slope has turned negative. If you look at the MACD here, it has dropped sharply, it is flattened here, so a recovery here can be expected. The RSI and stochastic almost flat here. Coming to daily. Now look at daily chart. See, first of all, I have mentioned in my updates rise retracement. Prices were divergent from the 20 period, it is converged towards 20 period, and now it is trying to stabilize the support at 50 period moving average. For this to continue on the downside, the oil has to break below the 50 period moving average. The candle has to close below 50 period moving average, and then you can say that slight bearishness can be expected. Else I will still say that it is under retracement, and a breakout on the upside can be expected very, very soon. Also, if you look at the larger movement, you will find this is the larger channel in which oil is trading. This is the median channel. So it has breached the median channel, it has come to the bottom of this larger channel, and thus 8180 is going to be a very, very good support zone. MACD, now look at this MACD. This was the concern point in my daily updates, in my daily analysis I have shared so many times. Let's see, after forming this double bottom, it has seen a good rise, and now it has crossed over at the highs. So a retracement on the downside can be expected, and that is what has happened. See, the divergence is strong, suggests strong bearish momentum. Also, one must note, not necessarily that it will always continue to do this before bouncing back. It can try to yield couple of greener candles, converge a bit, and then fall. RSI looking downwards, and stochastic is also looking downwards here. Coming to weekly, on the weekly charts, prices have crossed over here. This is the moving averages crossover. This is a bullish cross. The median of the Bollinger Band situated at around 77, and the 20, 50, 100 period moving averages are situated at around 79, 80 zone. Prices are trading with divergence from this. It has tried to converge this. At the same time, one must look at higher lows here, so we have to wait for it to give a breakdown. And if it does stay below 81, 80 zone, certainly 79 is one critical level which we will be watching for. And then still, as I said, as long as 76 is there, we should not be treating this as bearish. A recovery is going to be strong enough in crude oil. So right now I can say a possibility of a slight bearish candle exists, but it has to break below 81 and 80 in order to continue with this downtrend for a little while. If you look at MACD, now look at MACD. If you observe this, see, after forming this base here, I have mentioned that this is the major direction. It has taken straight bullish here, then retracement, and now it has crossed over. Now see, this crossover has come after a retracement, and hence I expect this to continue for a while. What is happening right now? Too much of divergence calls for it to converge, which means couple of red candles, and showing a little convergence, again it will continue on the upside like this. And thus, as I said, every drop in crude oil is still an opportunity for us to buy, but as long as it stays above 76, yes, you can stay bullish, you can bounce back, you can expect it to recover. In fact, 80-81 zone itself is going to be, or rather 79. See, I see a very, very strong support for crude oil on the downside. First at 80-81, then 79.1, and then in fact on the downside there are further supports at 78.2, 77 and 76. RSI looking downwards, stochastic also coming out of the overbought zone, and that is why we can see couple of red candles here. So can it drop towards 76? That is a big question we need to look for the coming week. And specifically, if it stays below 79 is where stronger bearish momentum will increase. Else it can try to consolidate in its position between 79 to 82 levels. Coming to monthly, on the monthly charts, moving average is running parallel, trying to stay bullish, support levels at 79.80, very achieving the highs. It is trying to converge towards this zone possibly, and hitting these levels we can again see it closing the month at around 82, 83. This is what could be the best it may try to do. So it will fulfill the conditions here that the indicators on the monthly and weekly and daily charts may try to cool down in the coming week, try to stay bearish, moving towards 79, and in the last two trading sessions possibly or the last two trading sessions for the month we can see a recovery taking oil towards 82, 83. Thus this is something which I'll be watchful of, and from those levels again oil will be trying to fly off in the coming month. Now why it could? Look at the monthly charts here. On the monthly charts, oil has delivered good waves, and this is on the verge of a crossover, and I will be waiting for this crossover because this will lead to higher prices. This will lead oil to rally towards the top. Right now it is on the verge of a crossover. It is not yet crossed over, but I'll be waiting for it. RSI rising, stochastic rising, and RSI comfortable. So now we have seen the charts, we have seen the indicators. Time for me to give you the trading levels and strategy such that you can all trade profitably and comfortably. Before I provide you the if you want to learn this art of trading, you can be part of my 31st mentorship batch starting first week of May. In this batch, I share all my key tools, concepts, trading strategies, and the trade setups which I have developed with over years of experience, with the help of which you can identify the profitable trades and trends and take the trades profitably and comfortably. Now, you can reach out to me via Telegram or email for your queries related to the services. And yes, you can also be part of my signals channel on Telegram where trading as per the signals you can benefit. Again, reach out to me for your queries. And many of you had also asked me to recommend a broker with global presence which offers a swap-free account with the lowest spreads. You can find the recommended broker link also in the channel and video description. Lowest spreads are offered if you join through the link. Now first let's talk about the levels to buy. See 82.4, 82.6, this is the first resistance zone. It needs to break beyond this. Then I will be looking forward to 83.1 and then 83.8, 84. Now remember on the downside I have mentioned these as a greater support levels. Now this is going to be a good resistance as well. So once oil stays above 84, we can look forward to a rise. What is going to be the next target is 85 and then 85.6. Now this is a major hurdle which oil needs to break. Second major hurdle beyond 85.6 is where I will be looking forward to 86.1, 87, and this time if these two levels are taken we will look forward to 88.4 and 90 levels very soon. Yes, oil has not yet reversed. It is showing bearish signs, and thus a stronger breakout above 90 is difficult for month of April, but if it continues its upward move and breaks beyond 86, just stay bullish in oil. On the downside, you can sell here at 81.8, but 81.5 and 81.1, 81 levels, very good support exists here. Below this we are looking forward to 80.4 and 80.6 zone, and if it breaks below this you can expect a drop towards 79.7, 79.2. now this is the next critical level you should watch out for. If it breaks beyond this is where we can see a stronger bearish move towards 78 and 77. As oil has still great support. As farther it drops below $80 level, the stronger support it will gather. As long as it stays above 76, chances of recovery will be very high. Thus, if you see it staying around 76 in the coming week, you can initiate a buying entry and expect in the month of April or towards the next to next week or in the month of May, yes, it may try to give a very strong recovery. So take your positions accordingly. Like, share, subscribe and comment. Join my mentorship batch, join my signals channel, join my webinar series. Reach out to me for any of your queries. Do join the free Telegram channel for live updates. Do like, share and comment, friends. It is a great motivation. Thank you very much. See you again every day with more updates, and do watch the weekly reviews or other commodities. It will give you a fair idea for the further week. Thank you.